Hey, good day, good people. All right, so today's video, I want to just go over higher time frames. We're on a weekly chart. I'm going to go through multiple assets on the weekly, and we're going to see what it looks like on a higher time frame, so we can get an overall picture of what we're dealing with. Also, there's a lot of opportunities for you as swing traders, where you can actually put a trade on, set your stop loss levels, and just let it fly, right? All right, so we already seen that. Let's see, okay, 1, 2, 3, 4, 5, 6, almost 7 weeks ago. What day was this? A month, I meant week. So this was Monday, January 30th. All right, we had a double top, so this would have been a good trade setup. Now, check this out. At this point, it really doesn't matter somewhat where we can enter in. It can stay within this region. It doesn't matter, especially if we're just taking a decent lot size. All right. We like to trade to the neckline. So this is 433 pips. That's not bad, right? All right. Now, what is this? All right. This is a 38 pip drop. All right. But let's say we did a standard 150 pip stop loss. If we did a dollar lot size, all right, you hit for $433, you may say that's nothing. But, what is that? Seven? Well, hold on. Let me see. So this week 1, 2, 3, 4, 5. So 6 weeks, right? And probably be a little bit before 6 weeks. But even if you didn't take it to the neckline, you just got out here, you still making pretty good. I mean, how many people out there can risk, especially you got a um, uh, 500 to 1 um, leverage for every dollar you invest. You could borrow up to 500 times or use leverage. That's pretty good. If you took a standard, of course, that's over 4,300 and some odd dollars. But you also will be risking 152 times 10, which would be 1,500. So that's not bad as well, too. All right. So it depends on your lot size. I'm sorry, your position. Let me slow down. It depends on your account size. So if your account size is great, then you can do that. But these opportunities are here. Right. So that was a cab. Let's go through Euro, USD. And if we see, did the wrong one. If we see, we're just going to be looking for double tops and bottoms. I'm going to make sure I put all of them on there. And I'm going to do triples. If we don't see it, we don't see it. All right. So we don't see anything here. Now, there was one here, but this is back in 2016. All right. So we don't see none there. Keep it moving, right? Right. So we just hit the neckline on this British pound US dollar. And I don't expect us to take it at the extreme. Um, this is just a video for demonstrated purposes. So that's not bad. That's 620 pip drop. Real good. Net line. Targets achieved. It took what? So this was, if you got in on this candle, 1, 2, 3, 4, 5, 6 weeks again. But you got to be patient, right? All right, let's look at the Australian dollar, US dollar. Now, in the two that we have found so far, we're seeing a 430, a 630 plus one. That's almost close to what is that? 12 to 1300 something pips. Even if you was doing a dollar lot size, you just made $1,300, $1,400 in 6 weeks. Like, and then guess what? If you got a $250 account, even though that's a little bit of risky because you gotta think that if it does retrace back, you only got so much you could play with. But let's say you had a $500 account, you technically could have took this and just tell yourself, "Hey, I'm doing a 50 pip max stop loss on both of those." You just made that, right? Um, this is too far back in time because it's 2022, but of course that one played out. But we're just looking for the weekly on this one. We did Euro USD, GBP USD. Let's do Japanese yen. All right. Now we see a head and shoulders on here. So this will be a good setup. And I did do an analysis on here. All right. So if some of you are not familiar with it, but here we go. We got left shoulder, head, bam, right shoulder. All right. And I did post this a few weeks ago. And it had people just got in, they were already be somewhat going into the right direction. We've already dropped 668 pips off that right shoulder that I had drawn up. Okay. In fact, I need to go in. I need to update on TradingView because I did post this. I need to update it. All right. So that was that. Let's see. Is there another US pair that I'm looking for? All right. So let's look at head. Oh, Swiss franc. That's what it is. All right. So Swiss franc. All right. The double bottom has occurred. All right. We do it here. We got some pullback. So this is good for this particular pullback. We may still can get up here. So maybe an opportunity to find some type of entry. But from here to there, it's 197 pip. But from right here to where it's currently at, it's already moved 179 pips. So if we was paying attention back here, essentially last week, we would have been able to get in on that one. And if somebody did, you got the 375. And remember, we like to take our trades to the neckline. We don't focus on the targets. All right, so that's that. Look at CAD JPY. I put in the wrong one. Sorry. All right. This is a good one. In fact, my kids found this one the other day too. All right. This is real good. Okay. So we definitely want to look for some entry. But this is what I'm going to do. I'm going to pretend as if I enter here. What is the drawdown? All right. So that's 178 pips or so that I potentially could be in drawdown if I take this trade and it comes down back to this region. So you know what you do? You put in a lot size that you don't care if that 157. Why? Because your mindset is saying this. If I'm risking 157 pips to make 461 pips. So it's almost like a 1-to-4. So that's cool. This risk reward is great. So what you could do is you could put in one of your small lot size. So if you got a small account, instead of going $1 right off the rip, you may go 50 cents. You may want to go over 20 or 30% because you give yourself on the first entry room for error, and then you can correct by scaling in and adding. Okay. And we also price can move and get to certain areas where you can say, hey, now I want to go on a lower time frame and I'm going to add on certain pullbacks because it's at key levels. But the overall trend is that we're trying to get back to here, right? All right, let's do this. Let's CAD JPY. Let's do Euro CAD. All right, nothing right now. Keep it moving. And of course, you see other patterns you could trade or setups. I'm just trying to teach you guys to stick with one strategy. All right, what we got? What we got? We got Euro, Japanese yen. And I'm not gonna go through every forex pair. I'm just picking top of my head. And let's do odd JPY. All right, that's a good one. Okay, it's a good one. So if we were to enter in right now, where we at now? All right, so this is stop protect the stop loss below 99 100 somewhere in here. We're good. But if we can get back up to this point, boom, that's 526 pips. It's worth it, right? So you see how I'm doing a numbers game. The higher time frame, it gives you more risk reward. On the lower time frame, it doesn't. Okay, so you start seeing a lot of 1-to-1s if you trade it on a 15-minute chart or 30-minute chart. It's like, okay, yeah, if I set my stop loss at, I don't know, 30 or 40 or 50 pips, but getting to the net line, if it's only 50 or 30 pips, you're really just doing a 1-for-1. So what happens is if you take on a couple losses, you're gonna have to have like a equal amount of wins to try to break even. When you have the risk reward ratio correct, you can take multiple L's and then just hit one time and either break even or you are profitable. So imagine if you're doing a 1-to-4. So I'm risking $25 to make $100. Well, guess what? I can lose 4 times in a row and just win one time and break even, or I could lose 3 times in a row, win one time, I'm in profit. So that's the beauty of it. It's just all about being able to stay in the game with your capital and doing the risk management. It's all about probabilities, right? Swing that back. If it's the right setup, take the swing. It doesn't matter if it's the right pitch. You take the swing. I mean, if you miss, you miss. But if you keep swinging on the right pitch, you're bound to get some hits, right? Um, Look at some stocks or so. Hold on. I put in Walmart. Okay. And let's see, Amazon. It's not showing up, but this is a zigzag. Should be a zigzag. Let me see if my zigzag actually pick it up. I don't know how it does on a bigger time frame. Yeah, it doesn't really show on a bigger, but this is a zigzag double bottom basically. So it's like a diagonal, like a push up. So this possibly could, but anyway, we wouldn't count it. um, let's see what anything with Bitcoin showed up. Any double bottom tops. All right, so we definitely back in up here in this supply zone. That's that. I don't know. They all gonna have basically the same type of patterns showing up. All right. What's another stock? So I don't do a lot of stocks like that. Let's see. Riot. All right, this is Riot blockchain. This is huge. So this is a triple bottom. Okay. Now let's look at this, and I end the video with this chart. All right. So we was here in March 20. Of course, it went. Came down here, right? And a double bottom occurred. And look at the growth. And like I said, we just go back to the neckline, right? So we got to the neckline. It grew 7,000%, guys. 7,000%. That's huge. Now we got a triple bottom, so price is back in this area. So you would think that, all right, people need to be what, looking to load in this area because this is a demand area. All right, price is finding this way that it spikes out of this area, and it repeats this cycle over and over again. So look at this. If we can get back to the neckline, you know, now you're talking about a 2,000% gain or so. It's not bad. And let's see where we currently are now. What would it be? It's about an 847% gain from where we are now. And I just sold off my option contracts on this because we saw the the triple bottom a few weeks ago, and it was just a prime for a setup. So we went on ahead and I put some contracts in, and it popped. So we're good. So I'm out, but I wouldn't mind seeing price correct a little bit and maybe look for some leaps, take it and just let it ride. Okay, but and this is not financial advice, so don't go running me over. Eric said no. It's just me talking out loud. I am not a financial advisor. Disclaimer. All right, so I'm gonna leave it with that. So take the chance, guys, of just looking at the weekly. You can go up to the monthly. You may see something too. All right, but look at the higher time frame so you can get an overall view of what's happening. But you're gonna have a lot of patience. A lot. All right. I mean, this is a lot of weeks. All right. This 2017. I mean, you look at all this. It that's a lot. All right. So even when this occurred, like I said, it occurred in 2020. And it took all the way till February of 2021. It took almost a year for it to do that. So you got to keep that in mind too. But there are some scalping opportunities when you can do what we call swing scalping. All right. So you're swinging, but you're also taking profits on the way as it goes into your direction and you're scaling out. All right. So you're putting on a newer risk, taking off old risk. So you can do that. All right. I hope you like this video. Hit the like button, subscribe, leave any comments. Hope y'all have a prosperous day. It's your boy E. White, the Contrarian Investor. I'm out.